Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Tuesday, the 1st of October. We'll start a brand new month and a brand new quarter of Q4. So before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, before we jump into the individual cross-asset classes short-term intraday technical outlook, let's have a recap what has taken shape yesterday in terms of news flow, economic data, events, and as well as the performance of the respective key cross-asset classes. So yesterday we do have one important news flow event, which is a Fed Chair Powell speech. So in Fed Chair Powell's speech, let me highlight the key highlights of his speech over here. So based on this Bloomberg News article, which is actually summarizing what he said yesterday, most important time is that he tried to actually tone down the over dovish expectation that is being placed on the Fed funds futures market, expecting the Fed to actually continue its jumbo interest rate cuts in the next couple of meetings down the road. So he did mention that Fed is not in hurry, that means not in hurry to cut rates, but it will lower rates over time. So he also did repeat that interest rate policy is not on the preset path. That means he tried to tone down market expectation that even though last month the Fed cut 50 basis points, it did not necessarily mean that the next cut coming in November, which is a couple of days or 2 days after the US presidential election, will also be 50 basis points. And he also did highlight over here, especially during the Q&A session in his speech yesterday. Yes, in the Q&A session followed his speech, the Fed chair acknowledged that projection issued by officials along their September rate decision point, this is the dot plot, towards a quarter point rate cuts at the next two meetings in December and November, right? That means, i.e., they penciled in 225 basis point cut in November and December this year. But he cautioned that the FOMC, the Federal Reserve Open Market Committee, will make its decision based in part of information they haven't yet received. And this is not a committee that feels that it's in a hurry to cut rates quickly. That means the gist of yesterday's Fed speech is to tone down the ultra dovish expectation placed by market participants in the Fed funds futures market on the Fed in the next upcoming Federal Reserve FOMC meetings down the road. So with that actually reduces the 50 basis point cut that was being placed a day earlier before Fed Chair Powell's speech, and even during the Asia session yesterday on the upcoming 7 November FOMC meeting. Previously, it was at 52%, which I highlighted yesterday. And after Fed Chair less dovish speech yesterday, it was reduced to 36 or 37%. So what you could see, let me expand my screen so that you guys could have a clearer picture. Okay, so previously, right, over here, the 4.25, 4.5%. Okay, so right now the Fed funds rate is 4.75%. So in order to go to 4.75 to 4.25, there were 50 basis point cut, right? So a day before, or even a week before yesterday's Fed Chair Powell speak, it was hovering a rather high mark, means above 50% at 53%. And now it was significantly reduced to 36% or 37%. And now market has now toned down the expectation of only 25 basis point cut in the upcoming 7 November FOMC meeting. Okay, because it increased to 63%. Why? Because by just looking at the difference between 4.5 to 4.75 to 4.5%, this is a 25 basis point cut. But despite yesterday's Fed Chair Powell less dovish speech, market is still kind of convinced that there will be another jumbo rate cut before 2024, and so now they just push down the expectation to the December FOMC meeting. So how do we know that? By looking at the aggregated probability. So if you look at the aggregated probability over here, let me highlight it in larger. Okay, so high odds now for a 25 basis point cut. Bear in mind that the current Fed fund rate is 4.75% to 5%. So after the potential 25 basis point cut that is being priced into the market right now, a high chance of 63% on the 7th of November, then thereafter 81% chance that the market is expecting a 50 basis point cut, because from 4% to 4 from 4.5% to 4%, that's 50 basis point cut, and the chances is being penciled in at 82%, or to be precise 81.6%. That's in the 18th of December 2024 FOMC meeting. So market participants are still having an inclination that the Fed will ignite at least one more 50 basis point cut before 2024, and so a total of 75 basis point cut from November to December. So that actually causes the dollar strength to remain kept yesterday. So if you look at the entire US dollar $5 so-called the dollar 5-day performance. Okay, let me change this date to 1st of October now, because it's no longer 30th of September. Okay, 5-day. So this is the 5-day rolling performance trend of the dollar against the rest of the other major currency. So over here, so what we could see is this Monday. So there was actually a slight push up in the US dollar strength after Fed Chair Powell speech. Then thereafter, the dollar strength starts to plateau over here. It starts to actually remains kept on the upside. Okay, so in order to look at it from a technical perspective, if you were to look at the dollar index as a benchmark of this dollar strength or dollar weakness, okay, this is the daily chart. So what I could see over here is that yesterday's push up still remains kept by this descending or declining 20-day moving average that continues to act as a resistance since 13th of September this year. Notice price action can't break above it since 13th of September, and yesterday there was a test close to this level, and after that the price actually inched down much lower, right, during the entire US session yesterday. So net overall, what we could see, if you look at the hourly chart, right, it will be much more obvious. Okay. Okay, notice on the hourly chart, there is a kind of a hesitation by the bulls to push up higher once it come close to the 20-day moving average mark during the later part of the US session yesterday. So overall, what we could see over here is that dollar strength still remains kept on the upside by this technical configuration of the US dollar index. And how does the performance of the major US stock indices fare? Very interestingly, right, if you look at the major US stock indices performance, the sell-off was initially after Fed Chair Powell speech, right? There was a sell-off across the board. So the S&P actually did have an intraday loss of negative 0.6%. Then thereafter, this sell-off was also kind of being muted as well, totally erased off after market still hoping for a 50 basis point cut in the December meeting, as being shown on the CME Fed Watch 2 earlier, and it managed to actually close near the at a session higher. So it managed to close near the intraday high yesterday and continues to print fresh all-time high. Very similar for the Nasdaq as well, managed to actually close back above the psychological 20K mark over here. So there's this intraday V-shaped recovery to erase the 0.7% intraday loss. Very similar on the Dow Jones as well. All right, followed by the Dow Jones as well. Okay, so net overall, right, if you were to look at overall all of them managed to close in the green yesterday. The S&P managed to gain 0.4%, the Nasdaq 0.26%, the Dow Jones almost unchanged at 0.04%, and the Russell 2000 0.24%. And the gist of it is managed to shape that intraday V-shaped recovery after Fed Chair Powell last dovish speech. And if you look at the heat map of the S&P 500, a lot of the greens are being centered in the more defensive sector like healthcare and real estate over here. And as well on the information technology sector, not so rosy. Why? Because we do see the semiconductor still underperforming. Right, the semiconductor sector still underperforming, with Nvidia almost unchanged. The second biggest inside the semiconductor sector is ABGO, down negative 0.11%. And if you look at the entire sector over here, that is almost more red and more we call it a black color, which is almost unchanged than green over here. So if you look at the entire from a sectorial perspective, if you go to the groups over here, it will break down according to the 11 S&P sector. So you see the top performing over here is a mix of defensive sector. So location service and causes an aggressive one because of Meta. It has Meta and Google inside, up 0.72. And the next three outperformers is in the utility sector, the defensive sector, pardon me, the real estate, healthcare, and utilities. All right. So what we could see over here is not so clear cut of a direct traditional risk on recovery that was being seen on the US stock market yesterday, because the sectorial leader comprises of defensive sectors that also led the V-shaped intraday rally yesterday, which is real estate, which is a defensive sector, healthcare, which is also a defensive sector, utilities, which is also a defensive sector. Okay, then that's traditionally what pardon me, yeah. So this is the intraday performance that's being highlighted to you guys from yesterday's important related news flow, which is Fed Chair Powell's speech. And going to the calendar again over here, so what are the data on the highlight is Germany, which is one of the core core Eurozone economy, yesterday reported its preliminary inflation rate for the month of September. All right, let me put it in 1 star so you get the core inflation rate. Okay, Germany, where is it? Okay. Oops, I think it's kind of, yeah, over here. So the harmonized inflation rate is considered the core inflation rate. So the core inflation rate in Germany, right, continue to inch much down lower as well, 1.8%. Below 2% that was printed in August, and also slightly below market expectation of 1.9%. So a clear cut that Germany inflation trend continues to actually decelerate on the downside. So what we could see is it's the lowest since February 2021, pardon me. If you look at the 5-year trend, okay, it continues to decelerate. So that actually increases or give more chances for ECB to actually announce another potential interest rate cut before 2024 ends. So that actually you see the euro dollar actually came down slightly yesterday in European session, but managed to held at the key short-term pivotal support level, which was last Friday low. Later I'll highlight on the short-term intraday technical outlook chart on the euro dollar. So not much data. So today's morning, okay, so yeah, that's the key data that's being highlighted today. Yeah, so what's earlier on released earlier is more on Japanese business sentiment data. They call it they break down calling by the manufacturer. So there's this Takan large manufacturer index over here. So this is considered as a manufacturer sentiment index for in Japan, so almost unchanged as compared to the previous month, 1313, and also managed to met expectation as well. Okay, so not much of a big surprise over here. All right, overall. So then what interesting in Japan over here is that yesterday, the newly appointed leader of the current controlling political party in Japan, the LDP, which is Ishaba. So he will be being appointed as the new Japanese PM for now, and he will actually use this his popularity, because opinion poll shows 50% of public support for him. All right, for him. That means he's the new leader. So he will actually call a potential, he said he will call, okay, because he was interviewed, that said he would call a national election on 27th of October. So that is will be subject to the current diet, which is the Japan Parliament for approval. All right, so keep our eyes or watch on that. But what's interesting over here is that this news flow is pretty much in favor of the Nikkei 225. So the Nikkei 225 managed to continues to rally after his shock, we call it a victory within the party to vote for a new leader. So after he was named as the new leader of LDP, also which is being appointed as the new Japanese PM, there was a slight of 6% intraday decline on last Friday on the Nikkei 225 futures, which I highlighted on yesterday daily dose. But yesterday daily dose, I did mention there's some bullish element that is being spotted on the Japan CFD index, which is our platform, and we still maintain our intraday bullish bias, and price actually indeed rallied much further. And in fact, in today's Asia session, right now you see the Japan 225, the Nikkei 225 is adding up 1.5%. Okay, so market view this news as relatively positive, given the fact that I think very likely there's no what I call it shock election result, being LDP and him will be likely being counted as the next PM, okay, even though after the snap election is being called on the 27th of October. So this is what market is expecting right now. Okay, so far this will be the key news flow and event that has taken shape yesterday. So for today, there is no much of an interesting fundamental and intermarket analysis on a cross asset class I will share with you all. So now let us now jump straight into the intraday technical outlook on the various cross asset classes. So before that, let me expand my screen so that you guys have a better look at the key levels. All right, so now let us start with the FX market first. All right, on the FX market, let us start with the euro dollar. So like I mentioned earlier on, due to that very weak continued deceleration inflationary trend in Germany, the euro dollar actually did a minor intraday sell off, because pricing in a potential expectation of a much more dovish ECB down the months ahead. That means potentially another interest rate cut before 2024 ends, but managed to find a support level at 111.12, 111.20, pardon me, not 111.12. I repeat again, 111.20. So that's our short-term pivotal support that we have yesterday to maintain our intraday bullish bias over here. So yesterday there was a push up on our resistance level, hit the resistance level, then thereafter the market plummeted down, okay, after digesting the euro dollar slide, after digesting that weak inflationary trend figure coming up from Germany, but managed to help at the 111.20 level. And the 111.20 level also correspond to the rise to the 20-day moving average, I think, as a support level as well. So likely to be playing within this range as well for today. So still maintain that intraday bullish bias, 111.20, short-term pivotal support level. First resistance level to watch will be the top of this key minor range resistance that is in place since 25th of September, which is 112 figure level. Only a breakout above 112 figure level, that means an hourly close above it, potentially sees the next near-term resistance coming in at 112.35. Then above it sees the major resistance zone at 112.85/113 figure. Why is it major? Because it's also corresponding to the long-term circular descending trend line since April 2008. So that's more than a decade plus of resistance. Okay, only an hourly close below 111.12, that means a breakdown of the hourly close below 111.12 will invalidate today's intraday bullish bias to kickstart a much more deeper minor corrective decline scenario unfolding on the euro dollar to expose the next near-term supports level at 110.90/110.70, followed by 110.50, which is close to the rising 50-day moving average. Okay, so that's for the euro dollar. Up next will be the sterling pound. So the sterling pound continues to evolve within this minor ascending channel that is in place since 11th of September. Price action came down, dipped down, rebounded right exactly at the lower limit of this minor ascending channel. You could see over here before doing the short-term recovery. So still no change, still remains a bullish bias on the sterling dollar, with the short-term pivotal support still standing at 133.40 / 133.10. So it's more like a range as well. First resistance level to watch in today's intraday bullish bias will be the 134.35. Only a breakout with hourly close above 134.35, likely to expose the next near-term resistance at 134.90 / 135.20, which is also a confluence with a Fibo extension cluster as well of the 1.618 over here. Only a breakdown with an hourly close below 133.10 will invalidate today's intraday bullish bias to shape a much more deeper minor corrective decline to revisit the next near-term support at 132.50, which also correspond to the rising 20-day moving average. Okay, so that's for the sterling dollar. Turning our attention next will be the Asia Pacific currency dollar pair, starting with the Aussie dollar. So the Aussie dollar yesterday tried to actually hit the 69.40 and road to 69.80. So that's the resistance that we highlighted yesterday in our intraday bullish bias, but managed to actually shape a decline, retest the 69 figure level before recovering into the close of the US session. So still no change, still using a slightly below 69 figure level, which is 68.70, which is the lower limit of this minor ascending channel that I drew from the low of 11 of September. So as long as 68.70 short-term pivotal support holds, we still maintain that intraday bullish bias. So right now, with the first resistance level to watch out for today will be at this level here. That means you got a breakout above 69.40, a break above 69.40, potentially en route towards the 69.80 short-term next resistance level, or the resistance level that we highlighted yesterday, which is conferencing with a bunch of Fibo extension level, one time from the low of 19th of September, and 1.236 time from the low of 11th of September, and as well as also corresponding to the upper limit of this minor ascending channel from the low of 11th of September. But however, if price starts to break down below 68.70 with an hourly close below it, then today's intraday bullish bias will be invalidated to kickstart another round of minor corrective decline sequence in first step, exposing the next short-term support level at 68.25, followed by 67.86, which correspond to the rising 20-day moving average. Okay, now turning our attention to the very tricky and interesting dollar yen intraday movement. Still recall that yesterday we do have a very tight short-term pivotal resistance level at around the 143.30 level, which is the 20-day moving average. Price action did dip, hit an intraday low yesterday of 141.65 during the start of the European session. Thereafter, it shaped a bounce, came very close to the support level that we highlighted yesterday in our intraday bearish bias, which is that 141.40. And I also did highlight to you that yesterday there's a risk of a snapback rally that may take shape on the dollar yen during the later part of the later part of the session for yesterday, and that snapback rally did actually materialize for that mean reversion rebound because of that very steep sell-off that was being induced by the announcement of the new Japanese PM. So what we could see over here is that price action now on the RSI now has almost reached the overbought level, and also the rally of yesterday's rebound, okay, has also, okay, let me put it properly, has almost retraced close to the golden ratio of 61.8% at 144.50. So this was 144.50 was also being highlighted as well. So what we could see over here is that price action now is coming very close to an inflection zone over here. Why is this considered as inflection zone? Number two different technical elements pointing to a similar level. One is the golden ratio of the 61.8%, and as well as the zone here, 145 figure, which is the pullback resistance of this former minor ascending channel support now turns into a pullback resistance. So with that, we did highlight this mean reversion bounce that could take shape yesterday, and this mean reversion bound more or less has started to play out already, given the fact that RSI is coming very close to the overbought level. current push up in price action coming very close to inflection zone as well, 14450, 145 figure level. So not much room to actually play in this mean reversion rebound. That one to stress for you guys. So with that, I'll be watching 145 figure level. So this 145 figure level slightly above the golden ratio at 14450. So this 145 figure level will be my short-term pivotal resistance to watch out for today. I will still maintain a bearish bias, a bearish bias for today, given the current price action is coming back close to the inflection level. RSI almost overbought level as we are speaking right now. 145.50, 145 figure level over here, 145 figure level, short-term pivotal resistance for today. Bearish bias on the dollar yen. First near-term support level to watch will be 14310, which is the 20-day moving average. A breakdown below this level reinforces the start of another round of impulsive downmove sequence, at least on the intraday basis, to revisit 14140. Okay, 14140 again. Only a push up with an hourly close above 145 figure level, then this intraday bearish bias will be invalidated. That means what you could see right now is the start of another mean reversion rebound sequence again on the dollar yen to revisit 14625 and even 14720 next, which is the minor swing high of 2nd and 3rd of September. Okay, so that's for the dollar yen, and that also sum up the intraday technical outlook on the major FX pair. So before we touch on the major stock indices, one particular interesting FX cross pair that I'll highlight for you all is the Kiwi yen. Okay, it's a cross pair, it's a Kiwi yen. So Kiwi yen over here, this is on Friday as well. It managed to actually reacted off the 200-day moving average, and price action managed to shape that retracement as well. Yesterday the retracement, and now the retracement is back very close to this former minor swing high of 3rd and 2nd and 3rd of September, where this is considered as a failure bullish breakout, because price initially break up this this swing high here, 2nd and 3rd of September, then before it plunges. So this is considered as a failure bullish breakout zone, and now price is revisiting this failure bullish breakout zone with the hourly RSI continues to shape lower high. Okay, there's a lower high on the hourly RSI, so indicating that yesterday's push up over here is lack of upside momentum. All right, so with that, right, I'll be using first resistance level to watch for sure will be this failure breakout zone here at 9160 level, but I will still use Friday inverted V-shaped sell off on the Kiwi yen as my pivotal resistance, 92.18. Okay, ST pivot. Oops, what is going on? Okay, 92.18. Okay, so 92.18 short-term pivotal resistance on the Kiwi yen. First support level to watch for this potential intraday bearish bias is to revisit yesterday's low at 90.05. Breakdown below it sees 89.55 level. All right, and even below will be close to the 20-day moving average. I think I support at 88.65. Only an hourly close above 92.18 will invalidate today's intraday bearish bias or potential bearish bias on the Kiwi yen cross pair to see the continuation of this rebound to test the next resistance level at 92.80/90, which is a 0.764 Fibo extension and the minor graphical swing high area of 24th of July. Okay, so that's one interesting Kiwi yen FX cross pair potentially that we could watch out for. Now, with that, let us now turn our focus now to the major major stock indices first, pardon me. So in Asia, to highlight for your the Hong Kong 33, which is the Hang Seng Index, is closed for today. Why? Because the Hong Kong cash market is closed to celebrate China National Day, and the Hang Seng Index will reopen again in tomorrow Asia session. So no change. Yesterday it hit the first resistance before shipping that pullback. So the first support level to watch to maintain this ongoing bullish bias in the Hong Kong 33 will be at 20,240. Next resistance level to watch will be 21,710/21,925. Only a breakdown of the hourly close below 20,240 will invalidate the intraday bullish bias for tomorrow. Then we will kickstart the start of a mean reversion decline scenario after this very steep rally to make it retrace back towards the 20-day moving average. So next near-term support level to watch in this potential mean reversion decline retracement sequence will be at 19,790 followed by 18,980. And also bear in mind that the China A share market, that means the Shanghai index, the Shenzhen index, will be closed for today, tomorrow as well, and in fact they'll be closed for the entire week of this week to celebrate the China National Day Golden Week holiday, and will reopen on next Tuesday, which is on the 8th of October. But bear in mind that is only for the China A share market. All right, but the Hong Kong market will resume trading tomorrow. Okay, so right now with that, let us turn our attention to the Nikkei 225. Okay, so the Nikkei 225 rebounded as expected over here from this V-shaped recovery, right exactly at the confluence of the 20 and the 50-day moving average, and also that bullish divergence that was flashed out yesterday as well. So price has already hit the first resistance lower limit zone of 38,620/920 that we highlighted yesterday. So with that, I will tighten the key short-term pivotal support for today using yesterday's minor swing low area as my pivotal support, and also correspond to the 20-day moving average as well. 37,830 will be my tighten short-term pivotal support level for today. Still maintain that intraday bullish bias for the Nikkei 225, i.e. the Japan 225, above 38,920 for today, potentially revisit last Friday swing high area at 39,790. However, a price breakdown with hourly close below 37,830 will invalidate today's intraday bullish bias to allow the Japan 225 to evolve in a very complex corrective move sequence back to revisit yesterday's minor swing low or Friday minor swing low at 37,410 slash 37,090. Also what's this level? So this is actually the 50-day and the 20-day moving average acting as a support, and as well as the minor ascending trend line that I drew from the low of 6th of September. Okay, so that's for the Japan 225. Turning our attention will be the German 30, the German DAX. So the German DAX over here managed to shape a series of higher high, higher low. So still no change. Okay, so with that, given this potential bounce off here, and the RSI now back above the 50 level mark, so we will be a bit aggressive for today, given the positive element that's been seen yesterday that we highlighted earlier on. I'll be using this first support that we highlighted yesterday as my Titan key short-term pivotal support for today. Okay, will be at 19,245. Okay, 19,245. Okay, so then this will be a next support level to watch. Okay, let me tidy up. Okay, so using a Titan key short-term pivotal support at this 19,245, maintain a intraday bullish bias on the German 30. First resistance 19,550, a breakout above it exposes 19,690/755, which is a Fibo extension cluster level. Okay, 1.236 from the low of 10th of September and 0.764 from the low of 5th of August. Only an hourly close below 19,245. That means a breakdown of hourly close below 19,245. That would invalidate today's intraday bullish bias on the German 30 to kickstart a minor corrective decline sequence, revisiting 19,050. Below it exposes 18,820, which confluences or coincide with the rising 20-day moving average. Okay, that's for the German 30. And now turning our attention will be the major US stock index or indices, starting with the Dow Jones Industrial Average or the US Wall Street 30. So the US Wall Street 30 managed to survive right exactly at the 41,950 short-term pivotal support before shaping that intraday bullish reversal. So no change, still maintain the intraday bullish bias on the US Wall Street 30. 41,950 short-term pivotal support. Next two resistance level to watch, 42,730 followed by 43,170, which is the upper limit as well for the minor ascending channel that I drew from the low of 6th of August. Only a hourly close and a breakdown below 41,950 will invalidate today's intraday bullish bias on the US Wall Street 30 to kickstart a minor corrective decline sequence to revisit 41,535 in first step, which correspond to the 20-day moving average. A breakdown below it sees a deeper slide towards 41,120 next. Okay, so that's for the Dow Jones Industrial Average and the US Wall Street 30. Okay, flipping our attention to the Nasdaq 100. So still recall Nasdaq 100, we do have a short-term intraday bearish bias below 20,360 yesterday. Price action almost hit the first support level at 19,830 before shaping a bounce back to the 20K psychological mark. So with this intraday bullish reversal back up again, so potentially, right, it could now trade to the upper limit over here towards to retest last Friday minor swing high. So using 19,830 as my short-term pivotal support level, we will flip to an intraday bullish bias for a retest on potentially last Friday minor swing high at 20,360. Only a breakout above 20,360 potentially may see a series of higher high unfolding again on the Nasdaq 100, with the next near-term resistance coming in at 20,615, which is this minor swing high of 15th of July over here. Only a breakdown with an hourly close below 19,830 that would invalidate today's intraday bullish bias to see another round of choppy minor corrective decline sequence unfolding in the Nasdaq 100. Next near-term support level to watch 19,630 followed by 19,380, which also correspond to the rising 20-day moving average on the Nasdaq 100. Okay, so that sum up the intraday technical outlook for the major stock indices. Turning our attention will be the very interesting gold price movement. So this is the what we see in gold XAU/USD yesterday. So gold XAU/USD managed to actually break down below the very tight 2,640 short-term pivotal support that we highlighted yesterday, and it came very close to the next support level at 2,615 over here, 2,615. And what we could see over here is that the hourly RSI now has started to shape a bullish divergence as well, coming not ideally at the oversold level, but very close to the oversold level over here, higher low, whereas the price shape lower low over here. Notice lower low. So with that, I'll be using the 2,615 support level as my short-term pivotal support for today. So as long as this level holds, potentially gold XAU/USD may stage a intraday recovery, at least for today. So we will still maintain that intraday bullish bias on gold XAU/USD, but first resistance to watch out for will be that sell-off that was induced yesterday during the European session over here at 3 p.m. Can't break above 2,662 before that sell-off, intraday sell-off takes place. So first resistance will be at 2,662. Only a breakout above 2,662 will solidify the recovery scenario to potentially see the next near-term resistance coming at 2,692. All right. However, a price with have a hourly close and a breakdown below 2,615 that would invalidate today's recovery scenario, i.e. today's intraday bullish bias, to kickstart a minor corrective decline sequence that could potentially last for days or multi-day perspective. Support coming in at 2,590/2,570 in the first step, which correspond to the rising 20-day moving average as well. Okay, so that's for gold XAU/USD. Lastly will be West Texas crude oil. So no change for West Texas crude oil as it continues to hover sideways below the 20-day moving average and the 71 Titan short-term pivotal resistance that we have yesterday as well. So still maintain that intraday bearish bias below 71 figure short-term pivotal resistance. First support level to watch 68.15, a breakdown below 68.15, revisit the minor swing low of 10th of September at 11th of September, acting as a next near-term support level at 65.90. Only a hourly close and a breakout up above 71 figure level, that means an hourly close above this level, will potentially invalidate or negate today's intraday bearish bias to see a choppy upward push up to revisit 73.15 level. So 73.15 level is actually the this line here, 73.15. So 73.15, if you were to go to the daily chart, let's switch to the daily chart over here. Okay, 73.15 is in fact this former medium term or major ascending, major symmetrical support, symmetrical triangle support, now turns into a pullback resistance, which is at 73.15 level. All right, so that sum up the intraday technical outlook of the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? All right, so for today during the European session, do take a look out for the combined Eurozone preliminary inflation rate figure that will be out at 5 p.m. Singapore time. So this is a combined one. The Eurozone will be out at 5 p.m. Singapore time. And thereafter, during the US session, will be the ISM manufacturing PMI data, also considered as a leading economic growth indicator to watch out for. That's 10 p.m. Singapore time, and market participants will be pretty much closely watching the ISM subcomponent, employment subcomponent figure that is still very weak, below 50. Okay, that's indicating the job condition, the job market condition in the manufacturing sector in the US. Okay, so that will be out at 10 p.m. Singapore time. And thereafter, we have a slew of Federal Reserve officials speaking, Fed Bostic and Fed Cook speaking at 11 p.m. Singapore time over here. And during the early Asia session tomorrow, a slew of Federal Reserve officials speaking as well at 6:15 a.m. Singapore time. Fed Banking, Fed Bostic, and Fed Collins. All right, so that should actually sum up today's intraday daily dose of market insights. Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.